My favorite, best tip that I have for taxes is the accelerated bonus depreciation that the Republican Congress passed a few years ago.
So now let's focus on the subject at hand, which is the big secret here: how to pay 66% less in taxes. So go. What's the biggest secret there, Dr. Nate Lambert?
Oh man, well, I've done a lot of different tax saving tools. I mean, I'm making close to 7 figures a year. So that's a lot of money that the government could be taking from me. And I'm like, I would much rather have that to buy more properties than pay it to the government. So I've tried a lot of different things, retirement accounts. I mean, you can you can get a write-off as big as like $135,000 through retirement accounts. I've done some great creative stuff like that. But my favorite, and paying my kids, you can get 10,000 or so write-offs for paying your kids. I mean, there's so many great ways to do it. But my favorite, best tip that I have for taxes is the accelerated bonus depreciation that the Republican Congress passed a few years ago. And what this does, so let's just say you bought a house for $400,000. You could, and then you rent it out. So you have to buy it and have it rented out, or at least advertised in that year that you want to write it off. So you buy a house for $400,000, and then you can get 10 years worth of depreciation all at once. So usually you get 27 and a half years. With this bonus depreciation, you can get 10 of that in the first year. I mean, so down the road, essentially you're not getting more tax benefit, but you're just getting your cash up front, which I think is super powerful. So let's just say you buy a house for $100,000 or $400,000. The tax write-off on that is usually around 25%. So I could get $100,000 tax write-off for buying that $400,000 property. So I already wanted to buy a rental. I mean, it's in my plan anyway. Now I can just get huge tax write-offs for buying those rental properties. And so it works great. You buy like 9 of those, and then now you've written off $900,000, right? I mean, there's just, and here's the magic of it too. Here's one of the things I love the best is that you can have your cake and eat it too, because so many entrepreneurs, they write everything off, and then on their taxes, they can't qualify for any loans because they're not showing any income. What I love about this accelerated depreciation strategy is, like we just moved into our dream house. About a year ago, I couldn't have qualified for that if I had written everything off. But because I did this, I still showed some income. But then essentially the accelerated depreciation lets you write it off. But then for lenders, you get to count it back toward your income. And so you have your cake and eat it too.
That is amazing. Yeah. The cost segregation, accelerated depreciation, for our listeners, as a reminder, depreciation is one of the number one reasons to own investment real estate, because it can offset the cash flow that's coming in and essentially try to create zero tax years. And so what Dr. Nate Lambert's referring to is accelerating the timeframes of which you typically take it: multifamily, 27 and a half years, commercial 39. And then when you do that, you can get a huge write-off. But I do love the way you added that piece, the cake and eat it too, because you're right. As business owners, entrepreneurs, if we're writing a bunch of stuff off, it doesn't look great on a balance sheet. The bank doesn't necessarily, they're going to hold that against you, right? Because your income is going to be what your income. But what we're saying here, Dr. Nate Lambert, if I'm hearing you correctly, is no, they allow you can still write it off, but they allow you to put it back in as if you made it. Is that a fair summary?
That's exactly right.